Globally, we've got markets seeing upside movement today, and really a case of rising commodity prices on the back of supply concerns providing support to mining stocks in particular. The same seems to be holding true for the local bourse today.
Yes, definitely. I think starting with the price of oil moving up, I think that the cold winter in Europe is pushing the price of oil up, and all other commodities are following it. On our side, all the resources are looking relatively firm today. We've seen good moves by Anglo American and Billiton, and they're pushing up the whole market today. So quite a firm day, even though on thin trade.
Let's take a look at some of our resource plays there. You mentioned Anglo's sitting near enough to 340 Rand at this stage. We haven't seen prices like that on Anglo since April. What are you making of the drive higher there?
I think that the American market is starting to recover. I think that the prices in commodities around the world will be at very high levels in commodities. I think that we're getting back to those highs, and there's a good possibility that we break out of those. We break out from 340 onwards, and we'll see 360, and then all the way up to 400 if the American economy carries on recovering as well as it has in the last 2 or 3 weeks. So it's starting to recover in the States, and I think that all commodity prices will stay firm into the first quarter of next year.
Just how important is it at this stage, Rob, to make distinctions between the various commodity players or miners? Because we know that for the longest while, high gold price or not, gold miners have been pretty unloved.
Yes, I think that the consistent high price in gold is finally filtering through to the gold miners, and they are starting to make a little bit of money in the South African side. So you can start entering into those gold miners. We've seen gold fields move up into beyond 120. Harmony is still lagging a little bit with high costs, but they're starting to come through. So the play in gold, you can start to go into the gold shares, but the yellow metal, just as the gold ETF, is probably still the way to trade it.
And it's really the diversifieds that's attracting attention. We spoke about Anglo's looking at BHP. We're sitting at 270 Rand on that front, so sitting strong and still attracting investors at that level.
Yes, I think if you take a look at the diversified miners, Billiton's got good holdings in oil, that oil price beyond $90. The copper price at all-time highs that we saw earlier, and that Anglo's got very high volumes of copper. They've just got a really good copper field in Brazil that's coming to the fore next year, so looking really good. And then obviously iron ore, both Billiton and Anglo's got very high volumes of iron ore, and that very good prices there. That price will be reset in the beginning of January, and looking very good. Obviously the sovereign debt issues in Europe, we'll see if that filters through into the early next year, and see if France is the next one to be hit by sovereign debt problems. But currently China looking that they're supporting the euro, and that is very positive for the eurozone.
Well, certainly good to see that someone else is backing their endeavours a little bit more than just themselves. Taking a look at a bit of interesting news though that's filtered through around potash prices. They're going higher, enough to trigger some more corporate action on that front, where we've got Russia's largest potash producer by market value agreeing to acquire another player for $8.2 billion in shares and cash. So clearly BHP knew what it was doing in its bid for potash when that came to the table.
Absolutely. I think that it's a commodity that people have missed over the last year or two, and I think that people are coming in to get that fertilizer coming for food security. We saw that there's big problems in Pakistan with flooding, etc., a few droughts as well. So fertilizer is a commodity that's needed, especially in areas where a lot of the topsoil's been taken away, etc. So there's a very high demand for it, and I think we'll see some more corporate action in that potash area.
Well, talking corporate action, M&A activity, lots of it seeming to be rising to the surface. Speculation around the road ahead for First Rand here in South Africa, where we're seeing a cleaning up of its operations arise and possible extension of its African footprint via a caretaking operation over in Zambia. Lucrative target in your books?
I mean, it is a lucrative target. I think that we saw HSBC come for Nedbank earlier in the year. That fell through. And I think it's quite difficult for foreign companies to buy a South African bank. But our banks are very solid. They're well capitalized, and they have got good access into Africa. So I think that foreign banks will be looking at South African banks going forward. Whether they can get through the red tape, we'll have to wait and see. But First Rand cleaning up their book, cleaning up their business very well, and looking very focused and looking for growth going forward.
Quick look at Capitec within the banking arena, because this is a stock that never seems to slow down. We had expected to see some dilution when we had the company coming to market to raise cash, but it's just powering ahead. What's your view on Capitec?
Yes, you thought when they have a bit of dilution and come into the market for extra cash, in the long term it's positive, but in the short term you would have thought that maybe people would set it off. But looking really strong, 165 Rand. I can remember trading that stock at around 21 Rand. So looking very firm. Can they carry on the growth? Can they carry on building the amount of revenue that they have over the last 2 years? We'll have to wait and see. I think they're starting to get fully priced at this level, and they'll have to have maybe some acquisitions to get a little bit bigger than they are currently. So maybe they'll look on the acquisition path, maybe also into Zambia or into Africa as well.